We're good. Everyone's back.
Hello, everybody. My name is Lane. I'm going to be running today's meeting. We're going to first start off with two student pitches, CPE members who are looking to pitch their company. So Connor, why don't you start us off?
Yeah, for sure. Thanks, Lane, and thank you all for having me here. Really excited to kind of share what we've been working on. So I'm part of a team called Poly Volunteers, and we're currently going through the hatchery. And yeah, so we're looking to mainly recruit a back-end software developer right now. Our product is an app that essentially connects Cal Poly students involved in different organizations like Greek Life and different clubs to volunteering opportunities in the community. Our primary goal and like kind of the why behind what we do is just trying to increase volunteer engagement out in SLO. Especially right now with COVID going on, there's just a lot of need and a lot of people who need support. A lot of these organizations like the food bank and the homeless shelter are really struggling with not just financial resources, but just manpower too. And we know that there's a lot of students who need volunteer hours for Greek Life or for different service organizations. So we hope by making it easier for students to find those opportunities that we can kind of meet two needs at once. And yeah, so our app essentially is going to serve as a way for students to like track and categorize their hours, share it with their organization so they can report that they met their requirement for the quarter to their philanthropy chair or whoever else. We're also going to have a way for organizations to compete amongst each other. So the different Greek Lives can compete against one another, compare where they're at throughout the year. Same with different clubs. So trying to incentivize that behavior, get students engaged more, kind of like a Nike Run Club, if you're familiar with that. So yeah, that's pretty much it. I don't have any slides prepared or anything. I just kind of want to pitch that out there. And if anyone's interested in getting involved, even if it's not as a software developer or an app developer, we're always happy to talk with new potential team members. So I'll put my email in the chat. Feel free to reach out. And again, thank you all for having me today. So
thank you, Connor. We'll move on to Xander. Are you ready?
Sweet. Yeah, I'm ready. I'll go ahead and share some slides. All right, so today I'm presenting Yardy shoes. And so what is Yardy? So if you knew us in the hatchery, we were working on interchangeable soles, and we were kind of exploring different ways that we could implement interchangeable soles. And we found out, and we were looking at doing it for fashion. We were looking at doing it for kids shoes. And when looking into kids shoes, we found like a bigger problem was that kids' feet just grow super fast. So in the past few weeks, we've kind of changed directions. So Yardy is a revolutionary extendable shoe system that allows for the shoe to be adjusted to many different sizes. And like I said, we're in the hatchery. We've been in the hatchery, or I've been in the hatchery for about 6 months, but have been working on this new idea for about a few weeks now. And Yardy is an industry disruptor that saves parents money on kids' shoes while also reducing shoe waste. And I can share this website really quick. We have an animation, if y'all can see that. That kind of shows how it'll work. We're still in very early stages, but we have extendable, revolutionary, and dependable as kind of our keywords. And our value proposition is the shoe that always fits. And so I'll go back to the presentation and let's just look at some facts. So the children's footwear market cap was 34.1 billion in 2018 and is expected to get to 59.2 billion by 2025. And toddlers grow half a shoe size every 2 to 4 months, which is just insanely fast. And the average cost of a toddler shoe is between $30 and $50. And this fact at the bottom kind of startled me the most. It's that over 20 billion pairs of shoes are manufactured each year, and each individual shoe produces 30 pounds of carbon dioxide waste, which is just insane. And over here, we have an angry mother and she's saying, "Why do your feet grow so fast?" to her toddler kids. And yeah, in conclusion, Yardi is the future, not only saving parents money, but also reducing the environmental impact that shoes have. And like I said, we're very early on right now. It's just me and my roommate, who's like those are the only people on the team right now. So, but we're making a lot of progress very fast. And if you're interested in joining Yardi, we're looking for people who, or just anybody who's interested, but specifically engineers that can help build the shoe, or anybody who's good at marketing. And if you're interested, you can contact me here, and I'll also put that in the chat. And yeah, thank you.
Thank you, Xander. Elizabeth, are you ready to share the announcements for CPF?
Thanks, Lane. So hi, everyone. My name's Elizabeth. I'm the Vice President of Events for Cal Poly Fintech. I just want to announce that tomorrow morning, we are launching our winter case competition. It is going to be based on the finance industry. And so the goal of this would be to engage students with researching and analyzing components in financial technology. And so the details in our sign up will be made available on our website, our email blasts, and on all of our social media platforms. So if you're interested, go ahead and check out those platforms. And if you want to, there's going to be an interest form that I'm going to put in the chat. And you could go ahead and fill that out. And then I will follow through with an email letting you know that we have launched our winter case competition with all the details and whatnot. But yeah, thank you so much, Lane. I'm so excited for this meeting, and thank you.
Thank you, Elizabeth. We're going to transition now into the guest presentation, followed by Q&A. Throughout the presentation, leave questions in the comments for these two who are joining us all the way from Texas, Hafiz and Bryce, who are the chief executive officers and the lead product engineer for RiftPay. So gentlemen, why don't you kick it off, first beginning with how you guys got started.
Definitely. Thank you, Lane. And how's it going, everyone? I love those student pitches. That's awesome.
Yeah,
that's cool to see. So my name's Hafiz Abdurrahim. I'm the co-founder and CEO of RiftPay.
and I'm Bryce Devon, co-founder and lead product engineer.
So RiftPay is a group banking platform that lets users share, spend, and save money together with their friends and family. And so I'll get into the pitch deck later and really just go over a high-level overview of what we do, who we are. But I want to talk more about how we got started. So I'm currently 22 years old. How old are you, Bryce?
25.
I feel like I always get it wrong. So we recently graduated from AC. Bryce is 2 years ahead of me. I graduated last May. AC is Austin College, our college we went to. So that's where we all actually met. There was originally 4 co-founders. It was me, Bryce Devon, Adoba Yua, and Derek Richardson. Recently, Derek stepped down from the founder position, not for anything bad, but just his time commitment with his full-time job just couldn't match with RiftPay. So the 3 co-founders now are me, Bryce, and Adoba. But just kind of backtracking even before RiftPay, how we actually met each other and knew of each other. When I was 18 years old, I started my first company. It was called Terpfecta. And so the reason I did this wasn't because I knew how to start a company or what I even really wanted to do. It's because I wanted to try something and I wanted to learn what it means to actually start a company. And so I started Terpfecta. We really were focused on sourcing the purest CBD for cancer patients in Texas. And I actually got into business with 2 of my best friends from Dallas. Now, that was my first mistake. I got into business with 2 of my best friends. So the workload and everything going forward from there, it kind of was all on me to do all the work, get the product shipped, actually buy the product, make the investment in the company. And that's where I failed with the first company. So that company, Terpfecta, didn't really work out. But in Terpfecta, while I was working with my 2 best friends, I also enlisted Adoba, one of our current co-founders, to come help us with the marketing, kind of back-end technology, how it was going to work on our website. And then we actually had Bryce come in. Adoba recommended I use Bryce. And so I talked to Bryce, asked him, hey, got this idea for a CBD company. What do you think? He came up with some mock-ups for the website. we're about to launch, and then everything kind of went south. Well, from there, we kind of used those relationships. And then Adobe was the original person to come up with the RiftPay splitting payments idea. So he came to me one day in my college apartment and was like, hey, I have this idea for an app that can track receipts and split them with everyone that paid for the transaction. And I was thinking about that, like, whoa, like this is actually something I deal with on a daily basis, weekly basis with my roommates. And so we started talking more about the idea. And then we kind of decided to make it an actual, I guess, research project, you can call it. And so we enlisted Bryce, and then we really got to work on the idea behind splitting payments, our customer research, talking to our friends, our family, seeing if this was even a problem in the first place. And after that, we found an outstanding yes from everyone we asked that splitting payments and actually being able to pay together in real time was a huge issue, especially in the roommate demographic, but I'll get to that. And so that's kind of the genesis of RiftPay. We started at AC, we all knew each other beforehand as founders. And the one cool thing that kind of worked out in our favor is all of our specialties. I'm a business finance major, Bryce is computer science, Adobe's computer science. We all build off each other. So I talked to a few kids in the last breakout room, but what I was saying was if all of us were business finance majors, it wouldn't make much sense in actually seeing how we can get growth from actually launching a product to doing the marketing to doing the operations. So that's the cool thing about our team that kind of came together that's pretty unique, is that all of us had skills that could build off each other and then make us actually grow as a company. So I'll stop talking there. That's a little intro on myself. And then Bryce, you want to take it away?
Yeah. So thanks a lot, Hafiz. I mean, so yeah, I graduated in 2018 from Austin College, and I had actually attempted to try something of my own. So really, spring semester of my final year was the decision I made to let's pursue making a business and not possibly making any money for a whole year. And it kind of split my family in half of like how they felt about it. So that's just kind of something that you will probably experience more than likely. My mom was all for it. And my dad was kind of on the, the goalpost. But from there, I went and pursued making a company called Domingo, and Domingo was going to be a holistic culture learning experience through video games, because I love video games. And culture was something really important to me after I got to visit Japan my senior year. Long story short, it did not really work out for a couple reasons that I had no idea what was going on. I wasn't really web tech savvy. Computer science in school, some places can prepare you, but really for the most part, a lot of what you'll learn in school with computer science, and I'm sorry, computer science guys, but it's probably not going to help you out too much in the real world, because in school I learned Java, but in the real world, everyone wants to use JavaScript, a bunch of other web technologies, and Java wasn't really viable. So I went into web dev, became a freelancer, picked up some contract jobs for a website. And that's where I got some skills together. And Hafiz reached out to me. I was already talking to Adobe. I'm like, hey, I'm making websites and stuff. Let me know if you need me to help you with something. And that's how Hafiz and I met, which is kind of weird because I was always around his fraternity and always at his parties, and I never met I never talked to
we
him.
Never even talked to each other. It kind of worked out in the end. Yeah, I mean, it worked out though.
It did work out. So yeah, I mean, after that, I always like to go back to Austin College, like when I knew people. Now, not so much. It's like I don't know anyone, but I would go and visit Adobe and visit some other guys on the football team, because I played football there. And that's when we all kind of met up at Hafiz's apartment and was just like, oh, this is a cool idea, guys. Like, let's try it out.
Just kind of reminiscing back on that. I mean, we had a computer science lab called the Keck Lab. And so we'd meet actually every Thursday, I think. at 7
Yeah.
p.m. and we'd sit there for like 3-4 hours and just talk about what RiftPay could be, what the idea is there a real problem here, how are we going to solve it? And that's really where we started, is that computer lab and just fleshing out that idea, putting stuff on the whiteboard. Other computer science majors were in there like, what the hell are these guys doing? So that's where we really started from. But moving forward into the presentation, I'm going to share a pitch deck that we use to actually raise funds off of. But I'm not going to go through every single slide since some of them don't really make sense for this conversation. But I already intro RiftPay and who we are. Our mission is to close the rift between social interaction and group banking. So right now, money is very individual based, and we see this as a problem for many reasons. But we want to create an active and responsible solution for users to actually pay together in real time. And so it's a little infographic. You probably had that 1 or 2 friends that don't pay you back on time, or it's tough to get money out of them. You can send them a million texts, but you'll never get a response. This is what we're solving.
Right.
So diving more into the problem, 1, Americans lose more than $184 billion a year in repayments and reimbursements. What this really means is that people suck at paying each other back. 2, the financial industry is designed to cater to the individual and not groups. When you look at your smartphone, what do you see? A banking app, your personal finance management app, your investment app, everything tailored to you. Nothing for you to actually go spend with friends in real time. And then 3, there are no solutions that allow users to actively pay together. Kind of building off my last point, the key word here is actively. And I'll explain what I mean in this slide. So what are the current solutions? Method 1 is your kind of Cash App Venmo model. And that involves one person paying for the group, requesting money from others, and then being left with a host of problems. 1, they paid more than their fair share or what they actually owed towards that transaction. And 2, there's no guarantee that they actually get their money back. Then method 2, probably one you're less familiar with. It's more for the older generation, but traditional joint accounts, difficult to set up and outdated, and don't accommodate many use cases, especially short-term and non-spousal relationships. So here's my example for this is, if I wanted to go open an account with my roommates to actually pay our bills together and manage our finances together, I don't want to walk into a bank and have to sit down with the banker and sign papers with them. And so that's another problem we're really trying to solve. There's our founding team. I'll skip through that. And then I'll get to our target market. So as Gen Z and like as part of the Gen Z population, we want to create the solution for users like us that have faced this problem before or actively facing this problem. And who we're really focused on at first are roommates or college roommates because they share their expenses month over month. Now, our solution, it's pretty simple. Allow users to pay together, eliminate the need to pay someone back, and make banking a social endeavor. It's time to switch out of the view of seeing money on the individual basis and more on the group view when you want to spend with your friends or your family. So how are we making this solution a reality? Our first feature on our MVP are called circles. So this is the first feature of many we have planned out, but it's initially what we're launching with. Circles are group accounts that allow you to spend, share, and save with friends. So how it works is you name your circle, you invite your friends to it, you set permissions, and then you add money to a shared balance within that circle. And then you can actually use that circle card or card that comes with that circle to pay off that shared balance. And so more on the circle cards, each person in the circle that has the ability or the permission to spend out of that shared balance will have their own unique circle card. So it won't just be one for the circle. And this is the track group transactions. And then leading to the next point, track group transactions. So we all know spending with others gets messy, and we want to make it really easy for you to know who's spending what out of that shared balance. And then control as well. So you can set custom permissions, set spending and transaction limits, and even add and remove members. And so that's a quick overview of our product. Looking at kind of future things, future ideas, where our vision is leading us. We see ourselves as not only the consumer side of the transaction for groups, but also the merchant side. So leveraging our technology for businesses to use, allowing open access to our technology via open API for e-commerce websites, and then group investing with your friends. Definitely one that's not out there at all yet. And we want to be kind of the first to pioneer this space. Quickly on traction, we received funding so far. We're building with a company called Silo Money for MVP launch. And then we have a partnership with the Central Bank of Kansas City coming up in April. But yeah, that's just a little high overview of RiftPay. I guess from here, I really want to open the floor to questions. I want this session to be more useful to you guys as recent college graduates ourselves and kind of diving headfirst in the startup world. We want to know what questions you guys have and really what's stopping you guys from doing something like this yourselves. So I'd like to open the floor.
Can I start off, Hafiz?
Yeah.
Are you allowed to disclose the timeline? Do you know when this is going to hit the market?
Okay, so our MVP, we're doing internal testing right now. We have it fully built out and we're switching our backend services. But our goal to get it functional by at least Monday next week. And so we can start onboarding users by Wednesday, Thursday next week.
Wow. And then one other thing, how did you guys like first ascertain the feasibility of this? I know you mentioned to me that you had to create patents and such, but did you guys consult with somebody or how'd you know?
No, so that's actually a great question. So when we went into this idea and started talking about splitting payments and what goes into that, we had no clue what fintech actually was and how hard it was to be in this industry. So when we started diving into the problem more and figuring out, okay, if we want people to be able to pay off one card, how can we make this happen with the technology available now? And I'll talk about this because this is honestly, if you're looking into going into fintech, one of the hardest things as a startup founder. And so there's three main things. It's traction, funding, and then your actual MVP, like creating an MVP and getting access to that. And so they all tie together because one, you need a bank partner to actually get access to payment rails like ACH and credit lines, right? But you also need an investment to get that bank partnership. But to get that investment, you need to show traction. But then again, you need to build an MVP first. And how are you supposed to do that if you can't even get traction or investments? And that's kind of the dilemma with fintech is, as startup founders, how can we hack our growth and how can we hack ourselves to kind of put the work in, find I guess, different solutions than what's currently available. So for us, I'll speak a little bit and not disclose too much. We don't have patents right now, but we are aiming to get patents on our technology. So with our current technology, we use a company called Silo Money. And what they do is they're a banking as a service company. So they offer you ACH rails you can use. And we're using a company called Privacy for card issuance. So that's how we're actually giving people and sanctioning off cards. But we're kind of doing it the makeshift route. That's the reason we're not launching this to the whole public. It's kind of a closed launch with our close friends, family, test users who are really interested in the platform. And then the whole point of partnering with the bank is that compliance factor. By then we should have the funding to actually go through with the partnership. And then we'll have a more robust platform because instead of us dealing with compliance, customer support, the payment rails, the bank takes on a lot of that compliance heavy lifting, which as a startup is super capital intensive.
Yeah. Great. Thank you. Benjamin, why don't you ask your question?
So I feel like online banking, of course, is a huge like industry, and stepping into this is probably a little bit, I would say fearsome. And again, this is maybe not a question that you could technically answer, but like, is there any fear behind other larger competitors, or is there like a goal set like, oh, I want to compete against these guys, or oh, I want to get acquired in this case scenario?
No, definitely. Great question. And it's actually one we get asked a lot by VCs when we pitch them. What if Venmo rolled out group accounts tomorrow? Well, here's the thing. Venmo, the infrastructure, what they've been built on is P2P. Our model, what we're coming out with is called peer-to-group or P2G payments. So it's a whole entirely new model that sits on a different infrastructure. So for one of these companies to truly make the switch from individual banking to group banking would be really tough on their end. And we all know startups move faster than these big companies due to just how fast we can communicate and get stuff done and be agile. Well, that's the problem those companies face. Venmo's already tried to pilot group accounts. Their version of group accounts didn't really work out, but it's also not similar to what we're trying to do. So I think by moving faster and really kind of beating them to the curb, we see a possibility of getting acquired in the near future. That being said, I was asked this question as well today by an investor, and I also gave the answer of if we show profitability in time and pretty quickly on our B2B side, because when you go B2C, business to consumer, which is like an app you download versus you selling a product straight to a business, that is always a lot harder due to the scale, due to the unit economics. It's easier to sell to businesses, or at least that's my opinion. People have different opinions on that. So if we can show enough profitability in time within the next few years with our B2B model and investing, then I definitely see us going more the kind of unicorn IPO route. But it just depends on what we actually are able to show. And if it's not enough to be profitable and sustain ourselves, then I see an acquisition coming along.
Out of curiosity, is it possible to like limit who within like a certain group is allowed to make purchases? Or is it just like once you're within a group, can everyone make purchases and then everyone sees it?
Yeah, I'll answer that. So yeah, so there's permissions you can manage within a circle, and it's only when someone has the permission to spend that they'll actually get a circle card to spend from that circle. So if they never get their permission to spend, the only thing that they can do is put money in and out of the circle, but it can only be their portion of the circle's balance. They can never just withdraw a whole circle balance unless they're given their permission to do that. And they can't spend from the circle unless they're given their permission to do that as well, which would give them a card. Does that answer your question?
Yeah, that does. I have a quick follow-up question as well. Is it possible to make it so that people like aren't allowed to pull their money out as well? Like, for example, like if you're like running some sort of like a larger organization where you pay for membership, is it possible where like people put their money in, once the money's in, like they can see transactions that are going on within the organization, but they can't actually pull it back out?
Yeah, that's a great question too. So it is possible technology-wise, but from a compliance standpoint, this is where it kind of gets a little murky, because from compliance side, it's still the user's money. Now, this is something we're talking to the bank a lot about, because some of these different permissions can kind of cause some conflict in terms of whose money is whose and can they be locked out of access from that. As it stands right now, from what we've seen from the compliance side, no one should ever be locked out of their portion. They should always be able to withdraw and deposit to their portion, regardless of what's happening. Now, if they put their portion in the circle, someone spends it, they make a purchase with their circle card and it uses some of that money, well, it was given to the circle, so that is fair and fine. But as of right now, we're still kind of looking into that, because that's been a question someone's asked before. But from compliance, we really can't do that.
Very understandable. Thanks.
Yeah. So I wanted to, Matthew, what is our largest blocker? So there's kind of two things, and they kind of, it's like hand in hand. And I know, Fees, you can probably agree to this as well. And it's money and technology. And like, they are two separate things.
I'd say I'd add one thing to that, and who you know.
And who you know, that's true. And who you know, really. Okay, let's start with who you know. Like, connections are kind of the biggest thing. So the accelerator program that we got into was Falls Fintech, and we never would have really been able to find that had we not tried to get with another service provider called Galileo. We talked to them. They said, you can't use us because you don't have $5 million in your bank. So you can't use us.
And this is like, when we had no funding and we were just talking about the idea of RiftPay. The first thing we heard was you need $5 million.
Yeah, but luckily the person we talked to was like, hey, there's this new program that's starting. It hadn't even, like, this accelerator hadn't even started yet, but he knew somebody who was a part of just that crowd. And he told us, you should apply to this accelerator. This can possibly get you to a place where you can use technology like ours, but not have to have $5 million in the bank. And that's how we got into the accelerator. And, networking and things of that nature is really powerful. And just trying to build as much as you can. But sometimes it's still really tough to even do that. But if you can, just try as much as you can to build your network. But on the money and the technology aspect, it's like Hafiz was saying with that circular problem where you need money to use technology and to grow your company. Investors want to see traction before they give you money. Before that traction, you need a product. But that technology, that money factor is still a problem. So those two things is what's keeping us from giving it to everybody, because we can't afford that at the scale that we would want to go. And the technology that we're using isn't really capable of scaling that well, unless we put a lot of money into it, which we don't have.
So I want to talk more about that money part, right? So as future founders, future entrepreneurs, that's one thing I had to learn the hard way, is what it even means to raise money for a company. So for us, I'll give you an example. When this was first an idea, I went out for my first investor meeting. It was one of my mom's friends. All we wanted was 5K, but I was the most nervous I've ever been. I was sweating bullets. I was freaking out in the car. I've never pitched a company before. So I walked into his office. I sit down. I just put on some confidence, and I'm like, hey, this is what we're doing. This is what we're trying to do. What do you think? Success. We got 5K out of it. It worked pretty awesome. But 5K isn't close to enough to do what we want to do. So we started thinking a little bit bigger, and Adobe kind of took lead on that and was like, hey, we need to find money now. I'm going to find this money. He emailed 984 investors and VC firms across the country. Actually, sorry, across the world. And finally, one from Belgium finally hit the hook, and then started talking to us, did some due diligence, loved the idea, and then invested. So that's one thing, is fundraising. Right now, we're gearing up to raise our seed round at $2 million. And I can tell you, it's all about who you know, building that network. And that's why that's so important, especially at this age and how young we are. We're just starting off. The people that have been in the industry for 10 plus years ahead of us have all those connections. We don't really have those unless you have pretty network parents or something like that. But even then, yourself as an entrepreneur need to start building your network now. And even if that means hitting up a random founder like me on LinkedIn, I have so many people that just text me like, hey, Hafiz, can you hop on a call real quick? Like, I want to know more about RiftPay. Like, what about you? Like, what do you do? And those are the type of cold kind of calls, cold emails you want to get comfortable with sending. If you told me a year ago I had to come talk to 60 students, 40 students in a Zoom room about RiftPay, I would have been freaking out. But right now it's kind of a regular day where I want to kind of give my knowledge that I've learned to you guys and have you guys ask us questions on what it means at our age to start a company and how we've been affected.
Yeah. And kind of building off of that, because he was getting into investors and speaking to them. I saw your question, Sophie, of making the slide deck. So the slide deck had a lot of iterations. I mean, we've probably had like 10 versions of this pitch deck, and
20. Try 20.
20. Okay,
yeah.
That I was wrong. I'm just a developer, man. I don't see what's going on. But yeah, we've had a lot of versions, and most importantly, it pretty much changed almost every time we were talking to a different investor, because they wanted to know something a little bit more. Somebody else didn't care for what we had put in. And so for different investors, it's kind of important to see if you can tailor the pitch deck to them and make that pitch just a little bit better when they know you've done your diligence on knowing who they are. So you'll have a lot of different pitch decks, but mostly it was just talking to people. And, when we talk to investors, especially early on, sometimes we knew we just messed up the pitch. Like,
you're going to get roasted, just flat out. If you're a founder, you have to have tough skin. You're going to get roasted. You're going to get shit on. It's part of the process. For us, the amount of people that told us, why do you have this slide here? Or why do you have this slide here? It's really just semantics and not super important to our actual problem. A lot of investors, I mean, especially with the social dilemma with inequality right now, and us being ethnic founders, we've definitely seen that firsthand pitching to these VC firms that invest in solely white founders. We can see that kind of look in their eyes when they see us talk or pitch, and they're like, okay, well, why are these guys the best to do it? What makes them so special? So It depends on your background, but one thing as a founder is you have to have tough skin. And I'll walk you a little bit through my process of how I actually source investors and go through the pitching. What I do is I go through my problem, my solution, my market size, the basic of a pitch deck. You can Google it. I think one of the bigger VC firms has a great, I think Greylock Partners has a great slideshow on how to actually make a great pitch deck. But what I do is I focus more on who the investors are. So we're fintech. I don't want to go and look for an e-commerce investor. I want to go look for a fintech investor. So I source out angel investors that are in fintech, and then actual institutional firms like VCs that are in fintech. Now I start going into them more, researching who are they, what are their backgrounds, what are they invested in before, and then I start looking at those companies heavily. And what I usually try to do is reach out to those companies, get a connection with one of the founders, and then have them actually intro us to the VC. Because one thing in the VC world they're very particular about is they don't like accepting cold calls. They want someone they know, they trust to refer you and tell them, hey, these guys are awesome, you should take a look at them. So one thing I'd really focus on if you're trying to go out there and raise money is talk to people. Don't be afraid to pitch it, even if it's wrong, you think it's wrong, whatever it is, you're gonna get great feedback. Take that feedback, iterate on your pitch deck, do your research on investors, and then honestly just go out there and talk to them because they'll give you more info than you can thinking about it yourself.
Awesome. One follow-up to that. When you're pitching, do you think people look more for like your kind of founder personality and your persona, the idea itself, or like the potential revenue or the potential to be like the market size, pretty much?
Yeah, I'd say again, it depends on the VC. VCs are very particular, interesting bunch of people. You have like the Texas VC firms that really focus on the numbers, the traction, they want to see hard data. But then you see the California VCs who are more, that's kind of where the term paper company, or like writing your company down on a piece of paper, your pitch, that's where that term kind of coined from, because you talk to a California VC, it's a lot more relaxed and they're trying to see the bigger picture of what you're trying to do. You're talking to Texas VC firms, Southeast VC firms, they're all going to be focused more on the numbers. So again, it depends on who you're talking to and why you want to talk to them.
Got it. Thank you so much.
Great question.
Hafiz, what was the primary reason for all of the first rejections? You said you sent out all those emails. What was the primary reason?
I'd say at that point, we didn't even have an idea of what the app was going to be. We barely knew what we wanted to do with it. It was really just saying like, hey, we want to do something with split payments, especially in the group banking space, and really make that our own. And I think that's what took those initial angel investors by surprise. I don't know what it was. I can't really explain it either. To be honest, we got really lucky. That is basically a 1 in a million shot to get funding like that. But Adobe pulled it off for us and we just kind of got lucky with that.
That's so awesome. Is there any questions that are unanswered in the chat?
So I saw one about how's RiftPay going to make money? Right now, with the consumer side of the transaction, kind of what I referred back to, where your unit economics have to be right to make it profitable. And usually that takes years. So take Uber, for example, they're still not profitable, but that doesn't make sense right now. When they scale even higher and higher, they're going to reach profitability. Well, with us, it's the same situation on the user side, the consumer side. That's why we're really focused on the profitability with B2B and switching modes and having kind of two products at the same time. So right now we want to focus on the consumer channel, the RiftPay app, but then we really want to look towards branching out into the B2B space and see how our solution can really help people with businesses, saving transaction costs. And that's kind of our main focus on profitability. Right now, how we make money, we earn interest on accounts held through the float by our bank partner. We earn merchant interchange. So every time someone swipes a card or makes an online purchase, we make money. And then we actually make money off of transferring money off the platform instantly, just like Venmo.
Yeah. I want to answer Christopher's question. How will we handle different types of circles? So this was something that we looked into a while back. And what we definitely see circles applying to a lot of different use cases. and how people would use those circles would change a lot. And at first we tried to actually come up with types. But what it quickly got to was we would come up with a batch of types and somebody would say, oh, well, what about using it for this? What about using it for that? And that's when we kind of stripped down circles to its base feature set and just said, with these features, could people use a circle for all of these use cases, as many of these use cases as possible with these key features? So that's what we focused on building with the MVP. So currently we're not messing with like circle types because there's just too many things that people will find a circle to be used for that we don't even know of yet. And there will be new things developed in the future. So we got away from circle types. So we just threw it out altogether. That's how we handled that. And just made it so our features were open enough for people to use it in the way that they felt was best for their particular group of people.
Hafiz, I've got another question for you guys. It's approaching the end of the meeting. I was just curious, when you guys release this to the market, you guys are a small team, obviously. What have investors advised you guys to do in terms of scaling this? Are you guys relying on a pull strategy, or are you guys going to scale and build out a network of employees based on the number of users?
So I think with that, it really comes into the economics of the deal. So like how our app actually loses money or burns money is super important in that. And since we are switching to a better technology and optimizing our backend structure, we're going to have a lot less cost going forward, especially at scale. So I'd say it's really going to be focused on growing the company as a whole more than it is just providing support for the user base, because the bank partnership really helps us take care of a lot of that.
Yeah, totally. Thank you.
Yeah, so Alex, on the if you have multiple circles, are you going to be carrying around multiple cards? So what we plan to do in the future is have a single physical card that you would get from RiftPay, and through the app you can choose which circle it's linked to, so that next time that you swipe, you would spend from that circle or your personal RiftPay account. But currently, right now, all we have available will be virtual cards, and every circle you get the permission to spend in, you will have a separate circle card for that given circle. So yeah, there's a bunch of different cards, but that was something that we saw as a way for you to just really organize. Yes, so that's another good question. So Edward, will virtual cards function the same way as Apple Pay? So you can put the virtual card within Apple Pay and spend it from there. So you will be able to use it from Apple Pay, but you will have to manually add it for now. In the future, we plan to partner with MasterCard through our bank partner, and they will allow us to make it so you can automatically put your virtual card into Apple Pay without having to do it manually. But right now, that would be the way. Just take your virtual card, put the information into Apple Pay, and you would spend it from there.
And then Quincy, I see your hand raised.
Yeah, my question was, do you guys think by you guys hustling and kind of working hard through this, tough time, do you guys feel like you guys have been able to maybe put some space in between you and similar competitors?
So definitely a good question. With our competitors, we have one direct competitor that's already launched. So they're called Braid, if you want to check them out too. They do the similar circle model. I'm also biased because I'm all for RiftPay, but I think their model is kind of iffy and very hard to use. But we're definitely not first to market. Braid is, but they are our main competitors, and this is a very early market. So we still have the opportunity to capture that first mover advantage, which means that we can scale past them and really get there.
And maybe as a little follow-up, do you guys, seeing that they're a sheer competitor and you guys both know of each other, would you, into the future, would you guys ever consider some sort of partnership or anything?
So actually, I've heard of Amanda, the founder of Braid, through different connections through MasterCard or bank partner, different VC firms. But I think from the trajectory we're both heading, we haven't actually talked yet. It's coming, I assume, but I would want to compete against her and really try to take out Braid. That's my personal feeling about it.
I like it.
Yeah, so there's some fun questions. So I did answer the one. We're not planning to switch to physical cards and not have virtual cards. We're gonna have both. We'll always have virtual cards because of how useful it is to just have it right there on your phone. But the physical cards, we want to introduce that because it's just a lot of people are still used to physical cards, using that in store. Maybe that will change as time goes on and we'll go away from physical cards, but currently, within the market, it's still something that a lot of people like to use still. So we'll have that option in the future with our bank partner. Currently, we only have virtual cards, but that's what we plan to do in the future. So David, you asked a question of, if you make a purchase that goes over the amount of money in the group, does a transaction get blocked or does it go negative? And yeah, it gets blocked. So we actually can't handle negative balances because that requires a credit line. And without a bank partner, we don't have the type of credit money available to handle negative amounts. This was something that we had to talk about very early on. But that's something that we'll look into with CBKC. But currently, as it is right now, it's just, it's not going to go through. Edward, you asked about what can you do to be a part of the very early iterations. Go to our website and sign up on our waitlist. We're actually planning to start a new program very soon, but the people that are on this initial waitlist are going to be the first people that we really try to reach out to give the app to and build your groups. So sign up on there as quickly as possible.
And I'll let Lane know, but we're actually launching a 10K incentive program for people to sign up. So what it is the top 10 circles at the time of launch, when we fully launch, will get $1,000 each. And so what you do is you actually compete. So each circle, when you make it with your friends on the website, you will have a special referral link that you can send out to other people. And once they make circles out of that unique link, it'll kind of come back and tally up to your circle balance. And if you have enough circle invites and successful invites, meaning they actually create a circle from the invite, then you'll win 1K, the top 10 spots will when we launch. So something to watch out for too.
Yeah, and actually on that as well, so launching publicly, we plan to try to do that August of this year. If all things go through with our bank partner, implementation is done, August 2021 is when we're looking to have a full public release.
Excellent,
Yes.
guys. I think that's it for the questions. We don't want to keep you over for too long, but thank you so much for spending the time joining us. You guys were extremely valuable. I think everybody got a kick out of the product, and I hope you guys absolutely kill it. I'm optimistic you guys will.
Thank you,
Yeah.
Wayne.
Thanks a lot, everyone. Thanks for having us.
Thank you guys very much.
Cryptocurrency? Yes. All right.
Go. Thanks for showing
Let's
up.
go.
Yes, sir. Awesome.